Okay, so good morning, everyone. Welcome to the Macro Snapshot. We are Wednesday, April the 16th, 2025, recording this about 7:30 in the morning. Okay, so I guess the main news overnight, guys, which got quite a lot of market reaction, could be some cause of optimism just out of China. There was sort of a spokesperson, semi-official, semi-unofficial. You see here at about 4:30 or so, China open to talks if Trump shows respect and names a point person, so someone, just one person with whom negotiations can be conducted. So that's, I guess, China sort of putting out feelers, trying to understand if they can sort of start negotiations with the US. But again, the key thing here is if Trump shows respect. And that may be harder for Trump to do than is possible because he lacks discipline. What was also part of this report from China was that the Chinese wanted Trump, they specifically said, to rein in, to control members of his cabinet. And I think one of the problems with negotiating partners out of the Trump cabinet is that all of these different sort of members of Trump's inner circle are giving conflicting messages. And that's making it very, very difficult to understand actually what the policy of Trump is. Nonetheless, we can see just the market reaction, which was relatively short-lived, although it does give us quite a good insight into the way the market is thinking. It's always kind of interesting to look. So I'm going to use a 15-minute time frame here, and we see that, for example, if we look at the ES, the S&P 500 futures, we can see that they gapped down initially at the open last night at 6 p.m. And that was because Nvidia came out with some quite startling news that their H20 very, very advanced chips, basically the Trump administration has prevented them from exporting them to China, like export controls. And there was sort of a document released from Nvidia, which, if I remember, was saying that that could represent about a $5 billion less revenue to China just on those H20 chips. So just to simplify the whole thing, essentially Nvidia, the Trump administration is going to make it very difficult for Nvidia and other chip makers to export their most sophisticated chips to China for national security reasons, and that's going to represent a very large hit to the bottom line of Nvidia. So you can see that the stocks opened pretty negatively there, down, and continued to fall. But this is when we had the news out of China about 4:15 in the morning, and you can see here that the ES popped. It's subsequently given a little bit back, but I suppose this is going to be a long and tortuous process. And the fact that China has basically at least sort of said to the Trump administration, here are some preconditions to at least begin thinking about negotiating the tariffs, could signal to the market. I'd say it signals two things. Is this the beginning of the end, in the sense the beginning of negotiations, or does it simply say to the market that this is going to be a very long, uncertain process, and until we have absolute clarity, the market still can't really fully rally? I mean, you imagine if you're, let's say, a Nvidia of the world or a manufacturer, you basically have to look forward not to clarity, but 90 days at a minimum of lack of clarity and confusion, and maybe even 6 months or 12 months. So if that's the case, and a lack of clarity is also very difficult for investment. And so I just, all that to say that from a market perspective, I think the possibility of this rallying substantially and durably is relatively limited. However, that's that. What is interesting, as I say, just to look at some of these reactions. So the stocks had a bit of a pop. We see over in Europe, we see the Euro stocks also did a similar kind of thing, falling initially on the Nvidia news and then rallying here, but giving it back. What is also kind of interesting is just to look at just how some of the stocks. Let's look at the 10-year. We can see that the 10-year fell and then it's rallied a little bit on that. Oil liked it quite a lot. You see here, oil had a pretty big pump up on that. So you can see here what's driving oil. Really, a lot of it's about OPEC Plus and Iran and sanctions and whatnot and technicals. But at the end of the day, the oil market, in order to have a sustained rally, does need to see clarity, specifically between the US and China. They're the two big customers of oil. They're the drivers of global growth and trade. So interesting to see the oil sort of mini sort of pop there on that news out of China. Also interesting just to look at some of the currencies, how they reacted. No big surprises there, but it's always kind of good to know. So we look at the Swiss franc. You see the Swiss franc on that news, safe haven, went down. If we look at the Japanese yen futures, also they went down. So no surprises there. With that logic, it's no surprise again that the Australian dollar popped higher, the New Zealand dollar, actually didn't react very much. That's interesting. So that's also giving us information that the Australian dollar is a little more sensitive, has a higher beta. Sorry, this keeps on disconnecting here. Very annoying. The Canadian dollar, again, not such a high sensitivity. So really, the Aussie very sensitive to this China news. Um, and if we look at the euro, just to sort of complete that, whereas the euro, we can see not a huge amount of reaction, and if anything, we could say that it actually had a bit of a negative reaction. So what we're seeing here is that a positive news on trade is going to be net negative for the yen and the Swiss. In the middle is going to be the euro, sort of a slightly negative reaction. Big beneficiaries are going to be the Aussie and other risk-on currencies, probably like the South African rand as well. Okay, so just looking again, just on the reactions there, we see that copper, where are we? So copper also having a nice little pop on that. So that's no surprise there. Silver continues to be extremely, so gold, there's silver also doing very well in that. So you see that silver are doing quite well. Okay, so that's what's happening today. We also have today, in terms of the tariffs, we have the Chinese negotiating team, I think, is in Washington to start negotiations. Trump has signaled just now this morning that he will join at some point those conversations. So I guess the point is that in terms of China and Japan, there are sort of active negotiations, or some preliminary sort of conditions maybe for China, and with Japan, there are some active negotiations starting. So that's an interesting one. If there is sort of progress there, I mean, could that be a bit more of a problem for the Japanese yen in the sense of a bit more weakness? So if we go back to the yen, as I say, it did fall a little bit. Let's go back to the USD JPY and just see if there is some progress today coming out of those trade talks. Probably too early. I mean, could we get a little bit of a pop here in USD JPY? Possibly, but again, this could be a story which takes weeks to develop and maybe months to conclude. But nonetheless, there seems to be some sort of sort of activity, so to speak. The other interesting thing this morning, which is probably very, very important, is the retail sales. So if we look at retail sales, let's just see what's expected. There's been a lot of talk and quite a lot of analysis, just reading analyst reports about front running. This whole idea that, especially with durable goods sales in sort of January and February were quite strong. Car sales in January, February were quite strong. And the logic here is that a lot of US consumers, in an effort to front run, to basically, sort of get their purchases in before the tariffs arrived, did a lot of sort of early spending. And so one of the sort of the takeaways from that is this idea that the retail sales today could be quite strong, higher than expected. But then the immediate sort of conclusion will be, well, okay, was that just a function of front running the potential tariffs or the real tariffs? And therefore, the real slowdown in retail sales will come later. So if that's the case, and let's just look at some of the numbers here. What I think is the important one is the control group here, which excludes automobiles, gasoline, and sort of home building. So these sort of slightly more seasonal and volatile products. But if we look at the control group, last time it was plus 1%, this time expected to be 0.6. Again, as I said, that's expected to be quite a strong number. So a little beat here, 0.7, 0.8 wouldn't be sort of shocking to the market. If we look at the headline number, advance 1.4. So again, you see quite a big jump compared to last time of 0.2. The other important one, of course, is X autos and gasoline, again expected to go up. So just in terms of from a trading perspective, if one believes or sort of likes this sort of thesis that there was some kind of front running, and I was just reading some analysis before doing this video now, which essentially is saying that, as I said before, automobiles and durable goods, especially, so quite a lot of sort of computer software, computers, iPads, cars, washing machines. It seems that there were quite a lot of sort of extra sales of these big ticket durable goods kind of items. And so if that's the logic here, could the logic be that, let's say, if the stocks pop, that maybe that actually could be a sell the rally kind of situation. And maybe if, for example, the bonds go down on that, if they fall on that news, could that be a sort of a buy the dip situation? Similar situation also for the US dollar. If on a strong number, the US dollar pops, will that be a sell the dollar sort of rally? So interesting one to see there. But again, drawing back, it's always, going to be pretty interesting just to see how the US consumer is doing. Although, as I said, a lot of economists are saying that these March numbers for retail sales are going to be a little bit distorted by, potential front running of tariffs. Excuse me, just having a little bit of, what do we have today? A lady grade tea this morning. The other interesting thing, which two other points, we do have the Bank of Canada. So let's just look. The Bank of Canada, just want to show you guys a couple of little charts here. So if we look at the Bank of Canada, which is at later on this morning, we can see here this is the effective sort of overnight rate for the Bank of Canada, kind of like the effective Fed funds rate, if you will, just the cash rate. You can see obviously they had a pretty aggressive hiking cycle going back late 22. They're on hold for a little bit. But what's interesting is that they've cut about 225 basis points. So since the where are we here? Basically, beginning the sort of the middle of 2024. So a very sort of steady cutting cycle here, even a couple of 50 basis points cuts. So as I say, this all adds up to about 225 cuts, and you can see here that the overnight cash rate is about 2.75. That's significantly lower than the Fed. And if we actually compare that, what I did, I made a little graph here, which actually looks at the effective Fed funds rate, which is 4.33, subtracting Canada, this overnight rate, which is this next one here. And you can see here that the differential essentially in favor of the US, so let's call it the Fed, is 1.58. And you can see that that is actually been ramping up as the Canadian central bank, the Bank of Canada, has actually been more dovish. So we're now getting this situation, and this historically is pretty high. If you actually go back, I don't know if I can go back here. Let's go back. I don't know. Let's see. Look at Bloomberg, see how good it is. So if you go back, yeah, this is like going back 5 years, I think, meant to be going back 5 years here. You can see that we're getting to quite elevated levels in terms of the differential. Now, ordinarily, that would be sort of pretty powerful for the US dollar. The US dollar would be much stronger versus a CAD. But what we've seen, if we look at the chart, we know that the USD has actually fallen quite a lot in the last 2 or 3 weeks against Canadian dollar. But you see that that's really not an interest rate differential sort of situation at the moment. It's risk premium. And I was just reading yesterday a bit of analysis. And a lot of commentators and analysts are saying that in the US dollar, there's about a 1.5 to 2% risk premium embedded in the US dollar at the moment. Essentially just trade uncertainty and sort of de-risking out of US assets, about 1.5 to 2%. So the US dollar is trading below fair value about that much. So if we do get some kind of trade resolution and we get some flows back in, there's definitely a lot of room for the US dollar to move. But the point is here is that in terms of the Bank of Canada, if we actually just look and see what's expected today, so here's what the market's pricing. So the market's pricing about a 40% chance of a cut, and you can see about 10 basis points of cuts are priced in. We know that one cut is 25 basis points, so 10 basis points equates to about a 40%. Now that's gone up a little bit since yesterday, because yesterday there are only about 7 or 8 basis points, and that's because yesterday we had the CPI, so the inflation number in Canada, which was a little softer than expected. And so it's sort of a coin toss here. I think it's 50-50 because there is also an election coming up in Canada on April the 28th, which is about, about 12 days away. And normally the Bank of Canada doesn't like to be seen as interfering politically, in that kind of process, the election process. So my thinking is that if I were the governor, Tiff Macklem, I would potentially not want to do anything, just stay put. And keep in mind, of course, that one of the candidates is obviously Mark Carney, who used to be the governor of the Bank of Canada and the governor of the Bank of England. So highly, highly, highly sensitive to what the central bank is doing, of course. So the reasons to just hold is to say that there's an election coming on. We've cut 225 basis points. There's still a bit of uncertainty. There's no hurry. We can, continue to cut throughout the sort of the spring going into the summer. On the other hand, also there's been some, Trump has exempted the USMCA sort of products, which any products which fall under the USMCA trade agreement have been exempted from tariffs from Trump's. So that one could argue that in Canada, the situation for Trump, for the economy in terms of tariffs, is not as dramatic as it was, let's say, 6 weeks ago or so. So there are reasons for the Bank of Canada just to hold. And again, we had pretty good CPI numbers out of Canada yesterday. On the other hand, the last 2 employment reports have been poor, and there is some evidence that sort of consumer spending is weakening. There's also some evidence that investment is very much on hold. And so if the Bank of Canada wanted to be a little more preemptive, for sure, especially with the slightly stronger Canadian dollar that gives them a bit of cover, and the lower inflation, which numbers got yesterday. Both of those points, the stronger Canadian dollar recently and the lower inflation numbers, which Canada got yesterday, could be a justification for them to cut. So as I say, it's almost like a 50-50 here. Interesting to see what happens there if they cut another 25 basis points. I don't think it's going to be massively market moving in terms of the Canadian dollar, just because the Canadian dollar, as I say, as I hopefully just try to sort of point out there, and we'll go back onto the daily chart for CAD, which is USD CAD here. You can see that USD CAD at a certain point in the height of the sort of the tariff fears was up to about 148. And as you guys can see here, in the last sort of 6 weeks or whatever it is, this last sort of period here, it's fallen about almost 6% or so. So quite a whoops, my bad, as people like to say. What am I trying to do here? Move that. Sorry, I've got a lot of stuff on the screen here. Yeah, so as you can see, it's fallen about 6%. It's now at quite an interesting level here. I think USD CAD, before it wants to pop down into this sort of, longer term sort of trading range, as you guys can see here, it was trading in this range and then pushed out. So at a pretty interesting level here, about 138.5 or so. If they do cut today, it's probably going to be about the forward guidance. If the Bank of Canada cuts and is relatively sort of dovish to say that inflation seems to be coming down, they're worried about sort of capital expenditure, they're worried about the employment market, they're worried about tariffs. There could be a case here for the Canadian dollar potentially to weaken. But on the other hand, you also have the problems with the US dollar. So I think at the moment, we're going to be just sort of in this little range here. On the other hand, what would get the Canadian dollar to strengthen even more, I do believe could be maybe an opposite kind of message where the Bank of Canada doesn't cut. They say they don't see any need to cut in the immediate future because they've already cut 225 basis points. The economy is stable. There've been some products which have been exempted from the tariffs. They're waiting for a new government, et cetera, et cetera. I think, that kind of commentary could lead us to believe that they won't be cutting dramatically in the future, and that could lead to maybe a little more weakness here. So we could see USD CAD going down maybe to 137, even maybe 136 or so. So we have to really see the commentary as well as the decision. Finally, we have Jerome Powell at 1:30 Eastern today, speaking on the economy. Let's see what he has to say. It's interesting because we had a pretty important speech from Waller 2 days ago on Monday, I believe it was, and I briefly spoke about that yesterday. That was relatively dovish, essentially saying that there are two scenarios, a 10% tariffs or maybe a more aggressive 25% tariffs. Waller was essentially saying that in both situations, there would be a little hit to inflation, so a little inflationary spike. But in both scenarios, he believed the inflation would be relatively like a one-off price adjustment rather than a structural thing. And he said that if we were to get a 25% tariffs, like the worst case scenario, that probably would lead to a recession and a pretty dramatic slowdown in the economy. And therefore, that would lead to a fall in inflation. And that would necessitate, therefore, the Fed to come in fairly aggressively and early and preemptively with cuts. On the other hand, the less aggressive tariff situation of, let's say, an imposition of 10% would still allow the Fed to cut, but maybe just a little bit later in the year. So that's interesting. It was relatively dovish from at least a monetary policy and interest rate kind of perspective. Powell, as you know, spoke about a week ago. Powell 1 week ago was a little more circumspect and essentially saying that policy was in a good position at the moment, risks were balanced, et cetera, et cetera. So I'm kind of curious to see today whether Powell sticks to the script, his own script from a week ago, and says, the risks are balanced, or whether he kind of leans a little bit more towards Waller and says, well, whichever way you cut the cookie, there's probably going to be some pressure for the economy, and we're very attentive to the risk to employment. So personally, what I'll be looking out for to hear, and I think which could be market moving, is if Powell indicates that the mandates, they're more worried about a global growth slowdown in terms of the employment market, and that he's relatively relaxed about the inflation situation, or whether he decides to put the emphasis on inflation and say that tariffs in whatever form are going to be inflationary, and therefore the Fed essentially can't cut anytime soon, and that they were prepared to tolerate a little bit of weakness in the labor market. So anyway, we'll have that there from Jerome Powell at 1:30 there. there are also another two Fed speakers speaking, I think one before and one after Powell, I think Schmidt and someone else. Let's keep an eye on that. Just in terms, just to finish off here, guys, we've seen that volatility. Again, I was signaling, I think, a couple of days ago that this importance of this level around about 30. You see here, it's kind of like obviously volatility has come down from its sort of highs of a week ago or so. But it's interesting that just as we speak here on Wednesday morning, that it has bounced off this 30 level. Interesting. I really think for stocks to have a kick upwards, this has to break down through here into the mid 20s. And the fact that it's not exactly doing that at the moment is not necessarily a good thing for stocks. And as I say, that news about Nvidia was not particularly well received. On the other hand, the situation with China, is that just posturing by the Chinese, or is this actually going to lead to some serious negotiations and compromises over the next weeks? Having said that, that's exactly the point. It probably will take weeks, if not months, to thrash out some kind of sort of trade deal. So in the meantime, with the uncertainty, here we are with stocks. They've had their 50% bounce from this whole fall here. They're now at a little bit of horizontal resistance. And as you guys can see here, the question is this some sort of weak sort of bull flag ready for another break upwards? I don't know. I think it's just sort of drifting downwards, just sort of saying, well, okay, what are we meant to be doing? Earnings are not bad, but they're not great. But personally, I think this is the key sort of zone up here between about 55.50 and up to about 56.80, so about 120 points here. And again, this is just between Liberation Day, April the 2nd, and then the market opening later, late on April the 2nd, and just sort of understanding more about the tariffs here. So, and this is the exemption. So I think we're just going to be stuck in this sort of trading range here at the moment until and unless we get either significant deterioration in the news, or maybe there's going to be some kind of sort of positivity coming out of the White House. And let's say today with talks beginning with Japan, no doubt Trump, or I almost called him Pump, Mr. Trump will try and pump the markets a little bit. Okay, guys, I'm going to leave it there. Good luck. Have a great day, and we shall keep the conversation going. Thank you.